Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks for investing for monthly and weekly cash flow. Wow. That being said, let's jump right on in. Oh, today it is September 4th, 2017. It is 11 o'clock at night. Where are your children? I have no idea. Anyway, that being said, let's jump right on in and see what we're looking at today. Now, there wasn't anything trading going on today because the market was closed. Let me quickly sign into this account here. Okay. Where were we before we were interrupted? Okay, so Dividend Stock Talk, where we invest in weekly, monthly dividends for cash flow. Let's get this out of the way. See who's popping up on. Let's clear the filter. Clear filter. See who's offering options this week. Today is the 4th, so tomorrow's the 5th, so the market's going to open back up tomorrow. We talked about MOS, about a week or so ago, didn't we? Or 2 weeks ago. Let's see how it reacted. Let's open this back up and see what this thing actually did for the last 10 days. 10 days ago. Well, she starts out the year at 28, quickly bottoms out to 23, trades there for a couple of months, climbs up to the high of the year, 34, slowly dwindles down to a trading range of 22, which trades there for 3 months. Then it drops down to 20, where she is at the moment. Now, MOS is on the 6th of September, right? So let's go back 1 month. The 23rd. So we would have gotten in on the 22nd. Okay? So MOS would have been on the 22nd because that was 10 days prior to, because 5 days prior to was here, then the 23rd. Then you would have got the signal first thing that morning. So let's see where she ended up on Tuesday. Actually, no, you would have gotten in on the 23rd. All right, so let's look at the 23rd. That's not right. 1, 2, 3, 4, 5, 6, 7, 8. Oh, 10 days, not 10 trading days. Okay. So the 23rd was Wednesday, 2 weeks ago. June, July, August, September. Okay, 30th, 6th. Okay, so tomorrow is. Oh, we weren't looking at that. We were looking at this one because this is the other one coming up. Oh, come on, Jim, pay attention. That's why we're a little off. Okay, so the 23rd, the 6th, which is Wednesday, which means we would have gotten in on a Tuesday a month ago, right here on the 23rd. So the 23rd is right here. She opened up at 19.90. Dividends only 15 cents. So at 19.90 for the opening, I hit the opening price, the high, the low, the close. Okay, 19.90 and the high of the day was 20.31. So that is a 41-cent increase. You could have been in and out with a little bit of a profit in the same day if you were going to do the dividend investing strategy. Remember, there's 4 different strategies. There's dividend capturing, where we just capture the dividend itself. There's dividend investing, where we look to grab the dividends equivalents. That way we're not sitting around waiting for it. So if we get in at the opening of the day and we have our trigger price set at whatever the purchase price was plus the dividend, then jump out with a trailing stop loss. That way, if you hit your 15-cent target, your trailing stop moves up as the stock moves up also. So that way when it retraces, it comes back, you get out and you capture your 15 cents plus anything over and above whatever the trailing stop had given you. Okay? So that's one. Now, the option for that one, I don't think we were able to see the option price 2 weeks ago. Huh. Okay. Now, this is what it opened up for, right? Had you looked at the spread, we were to go back one day. Which was, this again here for a second. Okay, so the 23rd is, what do you call it? Was the day we would have gotten in. Okay, which means you would have gotten the trade signal the day before, which was the 22nd. So you put it in the night before. Now the night before, you would have looked at this price right here. So the closing of this price of the 22nd, which is the day before you would have gotten in. So you would have gotten in the night before, then first thing in the morning you make your trade. Now, if you want to do just a dividend capturing, you just jump in and wait for the EX date to come. If you can do the dividends on steroids, you jump in first thing in the morning. We go to trigger trade plus 1.025%, and that's DS, and then your double dividends would have been the opening price plus 30 cents. Then you would have been out of that one. And then last but not least is the dividend equivalence, which is the dividend investing, which is you get, or dividend spread, sorry. The dividend equivalence, you would have gotten in at the opening of the price, added the dividend amount in with a trigger trade, get out. The target price would have been the opening price plus the dividend with a trailing stop loss to get your exit. Now the last one would have been your option spread. Okay. Now the option spread here that you would have looked for, she closed at 1990, so you would have been the 1950. So as long as the stock closes above 1950 on Friday, you would have made whatever percentage that was. Okay, so that was 29th, 30th, 31st, 1st, 2nd, that's Friday, right there. Yeah, this is Friday here, but that's 2 Fridays. Okay. Okay, right there. See that? 25th, 26th, 27th. So this was Friday right here. So yeah, you're in the money. Gotta love it. So that one would have worked out. The second one would have worked out. Wait a minute. Yeah, because if you tried it again, it would have opened up here. So the spread trade would have worked 2 weeks ago. It would not have worked this past week, because as you see, here's Monday. Had you gone in again on Monday, the close of Friday would have had the stock at 2037. Okay, and then you would have done the option spread, the 1950-20. That would have been your spread. So as long as the stock closed above 20, yeah, because if the close for the day on Friday was 2037, you would have went the next price down, which was the 1950-20 spread, which, as you can see, this thing closed out at 2011. So yeah, you would have made it on both weeks. So that's nice. It's nice to know. So that's MOS. Who else we got? ADP, ATM, CBS, CME, COH, Coach. All right, let's look at Coach. General Motors. Everybody loves General Motors. GM. All right, 2 weeks ago, what did she look like? Looking at the 23rd, 18th, 19th, 20th. Okay. Okay, here's the 23rd right here. Don't even need to have to look at it. Look at that. You can tell. She's at, she opened at with 35.27. Okay, and at 38 cents. Top of that would have been 38, 65. Yeah, 35.65, which she just hit. Okay. If not, it would have been out the next day or the next day, because it just kept on going up. Now that was the dividend on steroids, so the 2 point, wait a minute, no, the, wow. I get confused myself. I got so much crap going on in my life. Okay, that would be the dividend investing. So you jump in, you add this on to the opening price of the day, and that's your exit. Yeah, you would have been out on the 23rd. Okay? Now, double dividends, that would have been 72 cents on top of that. I think that falls for it right there. Okay? The spread, what was the close for the next day? Well, the previous day was 35.30. So the spread you would have got into would have been the 34.50, 35, and as you can see, that worked out just peachy. All right, so that's just a good one, you know, point blank. That's a good one. ADP, looking at 57 cents on the 23rd. We'll take a look at that. Is the 23rd. All right, here's the 23rd here. The opening was 103.43, and the high for the day was 103.92. We would not have made it on the first day, but we definitely would have made it on the second day. Now, had you bought it on the almost any one, because the dividend capturing would have got it, and then you would have been out right here, or you know, carry through the dividend, because tomorrow. Not tomorrow. Tomorrow's the 5th, 6th, 7th is the EX date for ADP. So who knows what it's going to do tomorrow? But you know, I would have already been out, because you know, you would have gotten in way down here. You know, the spread. Let's go back one day so you can see what the spread would have been. 23rd right here. Yeah, you would have made the spread, because the day before she closed at 103.72, which means the spread that you would have used would have been the 102, 103 spread. So as long as she settles above 103 for that week, you would have made your, what do you call it? You would have made your spread. Okay? So, as you can see, you got the spread here worked out for the first week. All right, and then last week you would have closed. She closed at 104.59, so you would have got the 104, and the 104.50, or the 103, the 104, which doesn't really matter because you would have in the money anyway. So those two worked out. ANTM. Let's quickly check out that one. ANTM. That looks lovely. The 23rd, which is right there. All right, the 23rd, she opens up at 194.24, and it's a 70-cent dividend. Okay, I'll buy it. Okay, so 194.74, she opens up at 194.74. The high of the day was 195.31. There's your 20 cents right there. I mean, your 70 cents right there. The day before, which is, as the 23rd. The day before would have been the 22nd, so the spread closed, stock closed at 194.95. So you would have probably not been able to do this one because it's so close to the 195, which means the stock had to go up. So in order to do the right trade, which we like to get the next strike price down, which would have been the 193 194 spread. Had you bought that one, the stock would have to stay above 194 in order to be profitable on that Friday. But I'm telling you, before I even, you may think I pre-picked these things to see what the numbers were, but I didn't. I'm just picking them up and taking a look at the numbers as we go. So on the 22nd, like I said, the close was 194.95. So the spread that you would have most likely have gotten into the very next day, had you chosen to get into it the very next day, would have been the 194 spread. So the stock would have had to stay above 194 in order to be profitable for that week. And as you can see, it didn't. Okay, she closed at 192.68, and had you done the spread the next week, which was the week that just passed, you would have been in the money because she closed at 193, which would have meant the spread would have been in the 192, 193 spread. And as you can see, she's at 197 now, so she's way in the money. So to answer the question, yeah, you would have been out the very first day for the dividend capturing. You would have been out the very second day for the double dividends, dividend investing. You would have been out the same day, and the spread you would have most likely lost. But I'm not sure if you really would have gotten into a spread on a Wednesday, being so close to the $200 mark. You know, closing at at 195.23. Whoops, sorry. Ooh. Important day prior to 194.95. Being so close to 195, I'm not quite sure had there been enough money involved in doing that spread. So you might not even have done it. Who's next? CBS. Let's quickly take a look at them. CBS. Okay, she looks good. Nice movement over the 10-year period. 823, which is right there. Okay, so 823 for CBS has an 18-cent dividend. Okay, she opens up at 65.27, and high of the day at 65.50. So that's a 23-cent move, and yeah, that encompasses the 18-cent dividend. So the dividend capturing, you might not have done so well. Because had you gotten in, you would have gotten in at the opening at 65.27, and she's right now at 64.34. So you would have lost on the dividend capturing, or you would have still hold on to it until the stock recovers and recapture that 65.27, and then you get out that. But for the dividend investing, yes, that would have worked. The spread, well, let's go back. We have to go back one day to check out the spread. The 23rd, which is right there. Go back one day. The 22nd. Yeah, you definitely would not have won on that one. Look how high it is. Sure. All right, she closed at 65.65, which means had you done the spread, you would have got 60. Wait a minute, it was 65.50. And as you can see, on Friday, she closes at 63.89. So we lost on dividend capturing on that one, but you would have made it for the dividend investing, because you would have been in and out, and you would have captured your 66, your 18 cents. It looks like it's CME, because we're going down the list, and every one is a winner so far, depending on the strategy you use. If you use the dividend investing, yeah, you make money on each one. All right, the 23rd, there you go. She opens up at 125.95, and the high was 126.56. So that's a 61-cent increase. Ooh, just missed the 66 punch, didn't we? Okay. It's 66. Okay, look at the number here. We're going to add 66 to that number. Okay, 66 and 125.95 is 161. 126.61. Yep, you would have been out the second day. Lovely. And yeah, take a look at that. You would have been out, and you would have won on the spread. But then this week, prior week, you would not have gotten the spread because she opened up at 127.63. So you would have wanted to look at the 127s in order to make money, and you're at 126.25. So lost out on that one. I'm not going to check every single one of these. I mean, you guys can basically do this yourselves. I mean, check and see how they go. The EX date is on the 7th. You take a look at the 7th. Okay, and you go back 10 days, 10 trading days. Okay, so the 31st would have been 5 days, 5 trading days. Not necessarily so because you don't trade on the 4th. Okay, so it would be the 30th, and 5 days from the 30th was the 23rd. Yeah, so you got to jump in on the 23rd, check what they look like, and see if the numbers work. Because it's all about the numbers. All right, that being said, let's take a look at what we have for tomorrow. All right. All right, tomorrow is the 5th. There's nothing really for tomorrow. No, sorry. September 5th, so we'll be looking at the 19th. What do we have on the 19th? STX and Tiffany's. Okay, look at STX. STX. All right. STX doesn't look that bad. She starts out at 34, goes sideways for a bit, jumps up a little bit to 38, drops back down to 35 again for about 2 months. Then she jumps back up to the 38, 39 area where she trades about 2 months. Then from there, she takes a big jump up to the 46 area where she travels for 3 or 4 months, making a high of the year at $51. And then quickly, when she hits that $51, she quickly drops back down to the $42 area. Trades there for almost 2 months, staggers its way down to where she is today at 31. Now, this could be the low, could be the bottom right here. She could be bouncing off, heading back up, and sticking with where she goes. Let's see what the seasonality looks like. Okay, seasonality. Okay, here she is right here, sorry. The way this reads, correct me if I'm wrong, for the next week, of this current week coming up, she should be going sideways. Next week and the following, she should drop down a little bit, which is right around where the dividend is, 10 days from today. So STX looks good here. It looks good here. You have to go check and see how it looks on the software. And let's put STX in here. STX. All right, so the STX spread. Let's get back to the regular chart. Okay, now as we said, the regular chart looks as if she's going to head up or go sideways. That's the way the chart looks. It doesn't mean it's going to happen that way. The seasonality says she should be going sideways. That being the case, that being said, the 3180, we should be looking at the 3150s. Which is right here, 3150s. Now that's 39 cents. If you can get them 39 cents, hey, great. So let's see what. Now that's weird. That makes much more sense. Okay, 31.50. Okay, that makes more sense. Let's take a look at what 50 looks like. And then, all right. The maximum we can make off of this trade is 650. It's going to cost us $1,900 to do this. Which, if you can do the math in your head real quick, that's pretty close to a 30%. So that's 30% trade for 4 days. Okay, now. If the stock stays where it is at 31.80, just go sideways, stay flat for the rest of the week, you make it 30%. If the stock goes up, guess what? You make it 30%. And if the stock goes down, a little bit. As far down as 31.37, you still make your 30%. So that one right there looks like a pretty darn good trade. Okay, let's take a look at what is next, and that would be TIF, which is Tiffany's. All right, Tiffany starts the year out at the low of the year, way down here at 66.78. Slowly moves up to a trading range of 72 for a couple of months. Moves up to, from there she jumps up to 79, almost 80 for 1, 2, 3 and a half, almost 4 months. Then she jumps up to the trading range, trades out the rest of the year at the 92 area, quickly drops down to 87, and she goes sideways for a bit. Where she is now at 92.37. She looks good. Let's see what seasonality looks like for Tiffany's. Here's where she is now. Tiffany's looks like she's going to go sideways with a slight bit of a downturn. So it might not be something you want to look at. However, let's take a look at what the numbers look like. And keep in mind, the seasonality says she should be going a little bit to the downside. And she's got this big jump right here. You might want to take that into consideration also. Now, average movements like this, not that one. That one's crazy. You know, all these are average movements for a day. Okay, here's another one, just a little bit above average. Okay, this was out of context. This one's out of context also. But just for the fun of it, let's find out what Tiffany's is offering, if anything worthwhile. And keep in mind that she has a lot of space to go down. All right, so she is at the 92.37, which means we'll be looking at the 91.92. 91.92, and as long as she stays above 92, I don't know. I don't think I want to play that one, because that one, it's a decent return. Number one, the only reason why I don't want to play it. And number two, it's, you know, big movement here and a big movement there. So what does that show me? And this thing is going sideways with a slight downturn according to historical performance. So I might want to go in one higher. That can't be right. One more. That's about right. Okay. So if we want to go with a 91, 91.50, that one I would feel a little bit more comfortable with, but not hugely, because 91.50 is right up here. Okay. I'm a little uncomfortable with Tiffany's altogether. So I personally would pass on it, but I'm going to show you what the numbers look like anyway. So if we go 2 strikes down, see what we can make off that one. That looks like 110 off a $400 investment, which is about 25% return. Okay, I can deal with the 25% return for 4 days if the stock doesn't move at all. This one gives you a lot of movement. Stocks right now is at 92.37, and your break even is at 91.39. So would I go with the 91.5, 92, or the 91, 91.5? Now I'm going to make 30% on the 91, 92, but the 91, 91.5, I'm only going to make 25%. So for that extra 5%, I think I want to jump into the lesser one. You know, this one right here. You know, the 91, 91.50. 25% is a nice return. Do 50 contracts. Let's see what that looks like. The number's going to be roughly the same, but just take a look at it realistic. So you drop it in 2,026 bucks, and your return is 550, which is a little bit more than 25%. So I would do this one as opposed to one closer to the money. That way, you have a higher chance of winning. Not that I'm saying to do it, and this one right here, this makes me a little leery. You know, is she going sideways here? What is that big jump? And what does the rest of the chart look like? Let's get out here before we can look at the rest of the chart. Okay, she's been going sideways for quite a bit. Like 1, 2, 3, 4, 5, almost 6 full months she's been going sideways in this range between 95 and between 90 and 95. She had a little bit of a drop below back into the 88, 87 area, but now she's back up at 92, which is in between where she wants it, between 90 and 95 bucks. So if she stays there, then yeah, you can make the, the 25% here and the 30% there. Okay, stock goes up, make it. Stock goes down, make it. And stock stays the same, you make it. Gotta love it. I love those kind of trades. So that's two decent trades for you right there if you're interested. Not that I'm saying to do them, but let's check and see if we got any questions. I got a good question the other day, but I can't quite remember what it was. No questions. Love it. All right. This is James from the 10-Minute Trader and Dividend Stock Talk.